This course is for educational purposes only, not for financial advice. I am not a financial advisor, but this will provide you information so that you can become independent as a trader and an investor. Welcome to the Money Printing Stock course. I'm really excited for you guys to start your journey with investing. I'm very excited that you guys trusted me to gain the knowledge that I've used that helped me become successful and a profitable trader. You're interested in this because you want to change your life. You took this course because you're ready to make a difference. So I need you guys to take this very serious, and I need you to get a notebook, get highlighters and a pencil when you're writing these notes. This information will change your life. I can't wait to see you guys next time. Have a blessed one. My name is Arissa Washington. I am a film director and investor from Wisconsin. Basically, I kind of just wanted to give you guys an understanding of who I am, my journey in investing. Why do I feel like it's important? Why do I feel like everybody should do it? Even if you're not a day trader, even if you aren't actively investing, I would say passively investing is always good. Just maybe looking into companies that you spend money with already, just to have your assets growing while you're spending money with them and their assets are growing as well. I've been studying the markets for about 5 years now. Then one day I saw that Cash App had an investing option. I clicked on it. I was like, oh, this is crazy. I didn't know that they had investing on here. So how does this work? I was kind of on the fence. Moving forward, we have COVID 2020. Investing is always a great option just because if we run into situations like that, we are able to not take as hard of a setback. That's the most important part about investing. But basically, all of those situations that I've been through, the blown accounts, traveling, booking Airbnbs and flights just to receive knowledge, everything was worth it. Everybody that I met on this journey of investing was worth it. Every bit of knowledge that I, received was worth it. Every opportunity that was seized because I was putting the work in, everything was worth it. An investor is a life decision. So when you become an investor, you have to carry yourself as an investor, regardless if it's in the streets, regardless if it's in business, regardless if it's in opportunity, you have to carry yourself as an investor. An investor makes investments into opportunities to grow their profits. We are using stocks as vehicles. We aren't using stocks to become attached to. We don't marry any trade. We don't get emotional and only trade one stock or only buy one stock. When I started investing, I started with $300. I didn't start with a lot of money. I didn't start with $10,000, $50,000, $100,000. I started with $300. I think that my first day that I was just like, oh, this really works. I think my trade went from 300 maybe to 340. What? I was excited. I was like, whoa, I'm really out here making money from my phone. You become a different type of person. Your hunger is different. Your drive is different. Your opportunities are different. The way you look at life is different. This opportunity provided so much deliverance. I would say I'm a spiritual person, so understand I'll be using words that really connect to my soul because this was one of the biggest blessings that ever happened to me in 2020. I buried both of my grandparents. COVID hit, and depression, everything set in. But I know when I wake up in the morning, regardless on how I feel, regardless if I'm sick or happy or depressed or what happens that day, let's say I bought a stock. I'm not even thinking about this stock. Only because I buy in at such good areas that I'm confident in my trades. What you'll learn with me is how to be confident in executing in the market. When you choose to invest, and now if you get paid $15 an hour and you work 10 hours with the same amount of people, you could have your investments working in the back, and whole time you can double what you just made. And my money is making money for me, regardless on whatever else I'm doing. With that being said, I just kind of wanted to come to you guys and give you guys an opportunity to learn investing as being young so that when we are 30, 40, 50 years old, we aren't at factories slaving. I don't want to work my entire life to live for 5 or 10 years. That's not my lifestyle. That's not something that I've ever wanted for myself. Let's jump right into this. Are you interested in learning to trade, need additional income, but you're short on time? This course will break down how to analyze a chart, the basics of structure, a little bit on psychology, and how to get started investing in your future today. Pay attention because this information can really change your life. I'm not here to lie to you guys. I'm not here to hype your heads up. I'm here to be completely honest with you and just give you the information and the knowledge that, I've taken in throughout the years, trial and error, and the things that worked for me, the things that didn't. Yes, there will be ups and downs with investing, of course. Markets don't go up every day and things don't go down forever. So as long as you're patient, this will be a great experience for you. I'll give you guys some of the secret sauce from the courses and things and my mentors that they've given me over the years. Thousands of dollars invested into the markets, of course. As investors, we're looking more long term. There's short term investing for quick flips and day trading. Day trading is trades that are taken within minutes, hours. We can also talk about dividends. There are companies that you can buy shares in that you will get paid out when the company performs well in a percentage. And every quarter or every month. So let's say you own one share in AT&T. I think AT&T's dividend is like 25 cents. Their stock is $25. The hack is to buy enough shares that they produce enough money in dividends that you're able to buy another share every single time the dividend pays out. This allows you to continuously create wealth without thinking about it. So when I said passively, this would be a passive option over day trading. So we're going to go into the basics of what a candlestick is, the highs and the lows of a candlestick, the open and the close of a candlestick, the wicks at the top, the bodies being at the bottom. When you see a bullish candle or an up candle, these candles provide information that you might see every hour, every day, it could be every minute. Most times a bull candle opens low. There may be a struggle during this time to push price lower, and that's where you'll get the wicks that are located at the bottom of the candle. If it's a bullish candle and it's an up candle, that means that where price opened at, it closed higher. Bearish candles are the complete opposite. They open up higher. Price may attempt to push up, and that's where you would find a wick. But bearish candles, bearish meaning down, always close lower than they opened. Make sense, everybody? All right, so we have the bulls and the bears. When I say bulls, I mean up. When I say bears, I mean down. When you hear, oh, the bulls are in the market, then you understand without even seeing the charts which way the market is moving. When you hear that the bears are in the chart, usually you hear the Dow is down 400 points. Everybody, the Dow is down. The stock market is crashing. The bears are in control. These are things that you would hear when somebody comes to me and they say they have this chart. I ask them, do you think it's bearish or do you think it's bullish? Do you think that this chart is trending up or do you think that this chart is trending down? Simple. We're going to keep everything simple, guys, so that you guys really understand and can take in information. So we have support and resistance. Support being at the bottom and resistance being at the top. Usually markets move in a wave. Waves are created by support and resistance. Support being the floor, resistance being the ceiling. You can understand that price has to go and smack support to create resistance. You might see a stock doing really well, and it has a lot of momentum to go up. And when it smacks resistance, it falls down to support. Think about it like stair steps. You have to step on support to make it to resistance. You have to take the stairs. With this information that I'm providing, I'm forcing you guys to take the stairs. There are no elevators to success. There are no automations to success. So the information that I'm providing you is stuff that can change your life. support being at the bottom, resistance being at the top. So when you look at price and you see, oh, price is on its way to support, I might be looking to buy, but I want to wait until price goes back to support to buy. You buy at the bottom, we sell at the top. Buy low, sell high, buy low, sell high, buy low, sell high, buy low, sell high. Don't overcomplicate this formula. Don't overcomplicate these steps. Buy at the bottom. If you hear that a stock is up, oh, everybody buy Tesla. It's up 20% today, buy Tesla. Do not buy Tesla on the day that everyone's screaming buy. What goes up to smack resistance always has to reconsolidate and come down to create a new level of support. Let's say that a stock is up 20% today. Instead of me buying in that same day and maybe gaining 3 to 5% on that move, I'll wait. I'll wait until it has a super red day. Wow, this company is down 30% today. If I loved it at a certain price, when prices pull back and they become cheaper, it's on sale. I love coupons. I love coupons. Who doesn't love coupons? If I could have got something for $5 yesterday, but there was a pullback and now prices are on sale and everybody's screaming sell and prices are $2.50, now I'm buying double. I'm basically getting more bang for my buck. Let's talk about trends. When the bulls are in the market, when you see support being maintained and prices rising higher, this is where you see an uptrend. An uptrend consists of higher lows and higher highs. So every time price moves, it creates a higher place in the market than it did before, and it will pull back to an area of previous resistance that is now support and continue in a bullish pattern. Let's say a stock had been moving for a while in an uptrend and something happened with their company. Things will change. Stocks don't go up forever. Stocks don't go up every day. A downtrend consists of lower highs and lower lows. When price is falling, it'll fall to the lower low, which is support. It might bounce up a little bit. Nothing too crazy. That would be a lower high. Then price breaks through that area, the previous lower low, and creates a newer lower low. Stock market hours. I'm located about an hour and a half away from Chicago, Central Time. The stock market opens up at 8:30. I love 8:30. So the stock market opens up at 8:30 in the morning, and it closes at 3:30 in the afternoon. Usually the market slows down a little, like around 3 o'clock for me. So these are all things that you could take into consideration. But if you're located in the Midwest, most likely 8:30 is the time that you have to be paying attention in the markets. Most times you'll pay attention a lot earlier than that, because once your body gets used to the fact that you can make money in your sleep, you'll wake up in a better attitude, in a better mood. Because instead of you dreading to go to work, while you were sleeping, your money made some money. So now you feel a little better about yourself when you do have to punch the clock. Eastern time, the stock market opens up at 9:30 and it closes at 4. Central time, the stock market opens up at 8:30 in the morning, closes at 3. Mountain time, the market opens up at 7:30 in the morning and closes at 2:30. And on the West Coast, the market opens up at 6:30 and closes at 1:30. I would say I don't recommend buying in the stock market within the first 30 minutes to an hour, only because prices are fluctuating a lot within that first hour. It's trying to gain some ground from yesterday and create a new price for the future. So I just allow things to get a little settled before I place a trade. Some days I'm up at 6 o'clock in the morning and I check the pre-market. I might be up 10% like today. Last week I was up 16% in a day. This is just my money working for itself. As we build as investors, I just want you guys to be completely transparent with yourself. I want to invest because I want my kids to have a future. I want to invest because I want to spend more time with my family. I don't want to work hard for my money. I want my money to work hard for me. These are things that you have to mentally say to yourself, because stocks don't move quick. You're not going to get rich overnight, but at the end of the day, money that's sitting in the shoebox or under the mattress is not gaining interest. Money that is in the bank isn't gaining much interest. But money in stocks directly, you're taking control of your investments. You're not just allowing them to pick whichever stocks for your 401k. You're not in the dark when things do happen in the market and you lose your 401k. You're not in the dark anymore. This is kind of opening your eyes. Hello, everybody. Welcome to the next half of the course. This information that you'll learn now is marking up charts. You'll learn how to read structure, identify trends, actually physically in the market. So everything that you learned from the previous videos, make sure that you pay attention to the terminology, as I will use it in this video a lot. And feel free to look back if you have any other questions. When I first approach a chart and I'm looking at the chart now, I'm evaluating which way is this chart trending. The easiest way for you to ever identify this, where you aren't confused, is to zoom out. You have to zoom out into the higher time frames, because they give you more clarity. I like to go over here to the left side of my screen in the toolbars and grab what you call an arrow and start at the bottom where, maybe price was, or maybe it was a strong area of resistance, and just try to mark, the higher highs, the higher lows of the chart, or the lower highs and the lower lows of a chart. So if we took the arrow to this area, to this peak, and then we took another arrow from the peak, which was considered a pullback, this could be a possible area of support. You see price was supported here, supported here, supported here. We'll take the arrow again from this area to the next peak, and you'll see price pull back here. We'll call it support. Why? Because price was supported here, price was supported here, price was supported here. So from this area of support, the next arrow we create from this level to its peak, we see that's the peak. Why? Because price could not go any higher than that. So this is an important area. When we come down and see the pullback, price pull back to this area, an area of support maintained here. Also, support was maintained here. So moving forward, looking at the charts, we see that price is still continuing to make higher highs. Makes sense, everybody? In this instance, this would be called an uptrend. We'll put it over here. Make it bigger, just so when we come back to this chart, we know which way it's trending. So when we're looking for new entries to get in, we evaluate where price may be pulling back to, or where price may be pushing towards. So if this is an uptrend, when I'm marking off the charts, The areas, the areas are very important. Where the arrows are being pushed from, they're very important. Why? Because they give valid information about the chart. So price was pushed to this area, brought down back to this area, which we would call support, pushed to the next area, which we would call resistance, brought back down to this area, which we would call support. If we look to the left of price, we see that this new area of support was previous resistance areas. This is very important when looking at your charts, so you know really where to place or to look when getting into different trades. So we see that price came up from the support area to a resistance area, pulled back, not quite, you know, that's the same exact area that it resisted from before, but close. Then price takes off again from this area of support to create a new higher high and a new area of resistance. This is crazy. Today is election day, and we're finishing up the filming for stock class. Remove drawings. So I love to use horizontal lines that make my life very easy, a lot more simple. So the same exact areas that we use for previous resistance, we would use for current support. And we'll just make those lines green. Okay, so previous resistance, it resisted here, but moving forward, it supported here, it supported here, and price continued to push up. Price was then resisted at this area, and we will make this line red. So we have a new area of resistance after price resisted here, pull back to this area, which we would call support, and that would be green. The bottom is support, the top is resistance. So support here, pushing to the next area. We haven't quite established a new area of resistance, but this area of previous resistance was broken. So we just take that off of the charts, because until we have an established area, this could be a minor area of resistance on the lower time frames, but until we have a valid area of resistance, I just leave the top line off and allow price to do its thing. I really want price to pull back, at least to create a decent pullback before ever validating things as a pullback. So looking into NIO, you see that NIO has been an uptrend, and you see why we mark off areas of support and areas of resistance. Moving forward, let's just go to AMC is fine. Okay, so AMC, if we look at AMC, automatically we see a very strong line of resistance around $7.74. And why did I say that? Because this is the daily chart. Price was resisted and rejected here. It was rejected around this area, and it was also rejected again from this area. Price was also supported here at the bottom, which we will turn green, of course. price was maintained around this area, again around here, in this area as well. Although it is elections, price is currently at a very interesting level of support. So these are things that you should take into consideration when looking to invest into a company. Is this company approaching an area of resistance, or is this company approaching an area of support? And then we go and we look at the news of the company, the current situations that are happening in the world with the company. So if we look at AMC, knowing the theaters, people are pretty close. When they watch movies, we have the 6 feet distance recommendations. So things haven't been going as well for the movie theaters. They closed at the beginning of COVID, and that's where you'll see this huge drop. But this area that price is currently at is also an area where price had taken off from during the beginning of the pandemic. So on the long term, you would see AMC creating, if we go and grab the arrow tool again, we will see that AMC had a large downward push, a pullback here, large downward push, tried to create some type of floor. But then again, that floor was broken hard. So when you look at this company, we'll just say to this area, which price pulled back to almost the area of support, new resistance, and dropped and fell again to the same area of support. A little bounce up, a larger bounce down, a pullback here, follow through down to the downside, and it's kind of been in this range, in between about $8 and $2. So if you look in the market and price is currently around $2 for a share, and it's approaching an area of support, would you rather buy a company for $8, or would you rather buy the company for $2? You can, at $2, buy 4 times the amount of shares that you could previously. This is the important part about investing, paying attention to these large areas where prices were maintained or rejected. If this was an area of support and I was looking to get into a company, I create areas that price has to at least break before entering. So this area looks like an area of previous support. Why do I say support? Because price was supported here, also supported here, and almost rejected here. So on the safe side, before I would like to enter, I'd like to see price break upwards past previous areas of resistance. So this previous area of resistance would have to be broken before I looked for an entry and a continuation to the upside. So prices have to break this area before I look for a play to the upside. Yes, you can get in early, but you can also get burnt playing it that way. You have to see if price will break to the upside here or break this support level to the downside. Let's say you want to get in right now. That's fine. But at the end of the day, if price continues to go down, you'll be like, oh, I could have bought it at $1.50. Why did I buy it at $2.34? Price has to at least break resistance before entering after a downtrend. Make sense, everybody? All right, let's keep moving. Hello, everybody. Welcome back again. This video is mainly about psychology. A lot of people forget about psychology when looking into the market. Psychology is the best, the most important thing about trading, period. If your psychology is not together, if you aren't together mentally, you will most likely reflect those emotions onto your trades, onto the market whenever you're investing. There are different topics that I'd like to talk about. One being the fear of missing out. Have you ever saw a setup for a trade, or have you ever woke up and a trade was up 20% and you just feel like, oh, I should probably buy in right now. Everybody has some of this stock and it seems like a great idea. This is what you call fear of missing out. You haven't, one, checked the charts to see which way it's trending. You're just taking someone else's information as a fact. All the time, whenever somebody says buy this stock, yes, you can take that information, but always make sure you go to TradingView and you identify which trend the market is in. This is the most important part about investing. Do your own due diligence. Do your own due diligence. Another situation. Let's just say you may have bought a stock and it's doing phenomenal. It's up. You may have doubled your money that day. You're excited. You're jumping up and down and you close your trades. You're happy. You go and celebrate in your little circle and you're just excited. It's the first time you ever had a great day, a huge day. Be okay with taking those profits and understanding that markets create opportunity every single day. Don't feel bad if you see that after you doubled your money, the price had maybe tripled your money and you try to invest that money back into the market. Pay attention to the places where you buy in at and be firm on your trades. Your decisions, the time that you buy, make sure that you are not buying at the top. Why are you buying when price is so close to resistance? Why aren't you waiting until price returns to support? It's a mental game. Psychology is very important. Having that clear mind so that you can make these decisions are very important. Do not get greedy. You can make money every day. Do not get greedy. You can make money for years. Do not get greedy. Rome wasn't built in a day. Let's talk about greed. Let's just say that you do have money to invest. You're looking at different companies and you just kind of are spreading yourself thin with your investments. Oh, if this company takes off, I have a little money over here. If this company takes off, I might have a little money over here. The most important part is just taking that time to be able to say, I'm a disciplined trader. I'm a consistent, profitable trader. These are things that you have to get into your mind every day. Opportunity is created every day. I do not have to get greedy to make money. I can be me and make money. You do not have to be greedy to make money in the markets. Just allow opportunity to come to you, and when it does, be patient. Self-development is a huge part in psychology that nobody ever talks about. Sometimes you'll have to take a day and reflect in the market. Use your notebooks that you got for the course. Write down how you feel Hey, I've placed a trade. I'm super nervous, but I did it. I finally did it. I finally jumped into the deep end. This is something that I've always wanted to do. I've always wanted to become an investor. And this is the time. Now is the time. Write all of these in your notes. Wow, I closed out my first trade and I got my first profits. I feel phenomenal. Make sure you can document these days. Also document the days that you don't do so well. Oh, the stock was up and I was being greedy, so I didn't close at the top. I bought more. Try to be transparent with yourself. We buy at support and we sell at resistance. Let's also talk about over trading. Over trading is, hey, I just did great. I just won 5 trades. I need to place 10 more trades. I have to just trade until I can't trade anymore. I have to trade every moment that the market is open. Don't fall victim to this system. Be patient with your investment journey. If you pay attention to any other investments that you've ever made, I'm pretty sure that investing will exceed those expectations. All you have to do is be patient. Don't try to put your eggs in every basket. Don't buy every single stock that's offered at your broker. Grab a couple of stocks that you really like, that you see, that you believe in, that you think has a good future. A stock that's trending up. Buy in, be patient, hold your trades, and receive your blessings. Thank you guys for your patience. My most important thing when sitting down to mark up charts is grabbing a candle to have next to me. I don't know, it gives me some type of peace and just soothing. And I really, really, really love candles. I recommend your Happy Place. They have a great special that's going on right now, and they've been working with me and kind of sponsored me for my trading journey. Everybody, thank you for listening to this video. Have a blessed one. Take in all of this information, and remember, document your journey.